Good afternoon, everyone, and welcome to our webinar today, Invoice-to-Pay Transformation, the Toro Company Case Study. I'm Katie Walker, the conference producer and researcher for our SAP-centric financials conference. And this was one of our top-ranked sessions at our conference, which just took place in March. So we're excited to have Bobby and Mani back presenting the session again today. If you guys have any questions during the webcast, please use the Q&A section on your screen. We will have some time at the end to get those questions answered. Without further ado, I'll turn it over to Bobby Black, the Senior Manager, Finance Systems and Services at the Toro Company, and Mani Ramaswamy at Optima Consulting. Take it away, Mani.
Thank you, Katie. On behalf of Optima Consulting, Toro Company, and Eventful, I'd like to thank everyone for joining us on the presentation today, as well as if you access this presentation from the On24 platform in the future. So a little bit about Optima Consulting as we get started. We are thought leaders in the areas of enterprise information management and process optimization. We are able to effect digitization and transformations globally, and especially where the SAP and OpenText technologies converge. We are a very proud SAP Gold Partner. It's something we earn by delivering consistently and, of course, by leaving happy and referenceable customers, such as the Toro Company, who you will hear from today. And on that note, I would like to invite Bobby to take the stage. Bobby, over to you.
Thank you, Mani. So let's start off and set the stage by understanding a little bit about who Toro is. Toro is a manufacturer of a wide range of outdoor equipment, irrigation, and lighting solutions, many of which are pictured here. We are a company publicly traded with roots over 100 years old and revenues that are approaching $3 billion. You see our family of brands currently are about 9 distinct logos, and some of them are regional across the world. And the most recent change at Toro included an acquisition of the parent company of Ditch Witch, which added another set of 7 or 8 brands to our business that now includes the construction market for piping, cabling, and even drilling. So let's talk a little bit about what the Invoice-to-Pay project drivers were for us at Toro and why we took this initiative on. Largely, our objectives were operational and strategic in nature, and like any transactional projects, there's always an element of efficiency that you're looking to improve, and Toro was no different. Reducing labor and cycle time are really looking at those touch points that bog our teams down and oftentimes bog our processes down. So we really took a hard look at how many digitized invoices we were receiving and ways to streamline those and even the non-digital ones that come in, and really looked to use business rules instead of system customizations to do the heavy lifting. When it came to cycle time, root causing our exceptions really were our chief objective to drive straight through processing, and measuring our supplier performance really was about driving accountability to ensure that suppliers are billing us properly. If working capital is a priority, then I say invoice automation needs to be, and this is probably one of our key strategic drivers of this project. We are very focused on days payable outstanding. Toro is largely not a company that is focused on discount, but instead of terms. And we offer supply chain financing, some other alternatives to all of our vendors. But optimizing our cash is what really makes us allows us to be innovative and really manage our company well. Scalability for us is being efficient across our growing enterprise, which is largely outside of the U.S. So enabling a shared service environment, was really targeted at shrinking the labor demand worldwide in handling invoices and building that level of operational excellence between balancing our skill and our processes and our technology. So next, let's talk a little bit about the scope and objectives. For us, it reached, our scope reached a global extension across Toro's entire enterprise. We did that for a variety of reasons. We wanted to eradicate system and process variances and build a stable foundation for which we could standardize across our growing enterprise how we were processing invoices. And that's important if you're going to track performance and use some standard metrics. In terms of application, we are an SAP-based company with a single instance, and so we really wanted to harness the power of SAP and use SAP for invoice validation, rejection, the whole exception handling workflow, the whole end-to-end process. And we wanted to do that without customizations. Where we needed to also consider some system work was in our EDI space and our outsourced data capture for any non-digital invoices. And again, we looked for business rules to manage that instead of system customizations. In terms of growing our digital footprint, we have an initiative active right now to really transform our supply chain. As a manufacturer of many brands and many pieces of equipment, we deal with a vast number of suppliers. So our supply chain is really riddled with a lot of touch points. And that was really the part of this project is the procurement engagement. And that's where I would say the true transformation of this project really takes full effect. We want to find a cure for not just our increased volume of invoice errors, but just our increased volume of invoices. So this initiative is really where we look to minimize our growing volume and errors. With a project of this size, we needed to take a very active approach with change management and take work out and rethink how we worked. So we did that by cultivating kind of a change coalition. And that was intended to lead change through the business process and not just be a technology-focused project. This coalition was really intended to see and support the vision, and that, I think, was a key factor in our success. So moving on to, asking the question, why SAP Invoice Management? We're already familiar with SAP. It was already in place, and we found that when we go to our core there, this is where we thought we could leverage what was already in place, and again, the familiarity of already having SAP as our core platform. Manny, do you want to chime in on this one?
Absolutely. Thank you, Bobby. So as Toro was looking, for the right solution that would help them achieve their goals, their digitization and simplification goals, we were an integral part of that evaluation as Optima Consulting, and we guided them, very closely in the software evaluation process. Of course, we had to understand their current pain points, what they were looking to, what they were doing today, and where they were trying to get to as part of this transformation. And it became apparent jointly that SAP Invoice Management by OpenText, became an automatic choice as it delivered that foundation for the Toro Company. But let's take a minute to understand what makes it the de facto choice. For SAP customers, the biggest consideration is its nativity, the solution's nativity. SAP and OpenText's relationship and partnership is deep. It has matured over some 20 plus years. SAP essentially allows a select group of partners like OpenText to extend their solution footprint. The born out of this relationship is something called what SAP refers to as solution extensions. Essentially, these are products or solutions jointly roadmapped, in this case by SAP and OpenText, and that means it's as you travel, you mature through the SAP journey. You might go to S4 for HANA. The OpenText solutions are already ready. It goes through the same premium qualification that SAP subjects their own solutions to, and for all practical purposes, you're buying this and you're getting supported, through SAP. So there are something like 4,500 joint customers that SAP and OpenText have globally, and the results speak for themselves. OpenText has been awarded SAP's top ISV partner for past several years, and I know that the same has also been given to them this year 2019, and you'll hear more about that in the upcoming Sapphire user conference later this year. What is invoice management, and how did it allow Toro to reimagine their invoice-to-pay lifecycle? Right. So invoice management is global in that it supports every known local compliance in virtually every tax jurisdiction that SAP operates in. It supports a broad procure-to-pay vision by supporting every known commercial transaction that is possible. Be that a supplier portal like Ariba, be that EDI, XML if you have some local government mandates, or scanning as well as email-based invoice ingestion. And then for the rest of the process, it allows you to define a best-in-class, and I'll talk more about what best-in-class could mean, in your case, and how you can envision that invoice-to-pay lifecycle. But invoice management allows you to essentially reimagine and recast your invoice-to-pay process, to achieve or even perhaps exceed that best-in-class. Back to you, Bobby.
So let's look at the invoice-to-pay journey at Toro over the timeline here. The project implementation was just over a year, but the strategy and the due diligence made this about a 1.5-year commitment. It began with the drivers and the business strategy to digitize and standardize while growing our EDI footprint and building a more automated workflow was key. That really didn't accelerate until we designed and blueprinted those processes in great depth. Using our PO as our source of truth and really our matching and business rules, we drove our touch points down and developed some analytics to identify where those exceptions and breaks were occurring. The other key factor we considered in this phase beyond digitizing and standardize, but in order to accelerate really our management of invoices, we looked at our skill and determined that we were better off spending time root causing our exceptions rather than just posting them. So we have invested with a very different type of skill set here at Toro, and it's resulted in, I think, a much higher and even best-in-class ratio of how many invoices to full-time employee, where we're able to do a lot more with less because we solve things at the root instead of just getting the invoice to post. In the U.S. alone, we have about 6 analysts that manage about 550,000 invoices, which is well above, I would say, best-in-class caliber standards. So we take that team of skilled analysts and move that up kind of the journey here to the operate stage, where it was really about our post-go-live environment. And we're well on our way to establishing our shared service environment. We have that in place in North America and the PAC Rim We are just putting that in place this year in our European region, and it's very much founded on measuring performance and specifically by our vendors. We look at where our key error and touch points occur, and we engage our procurement team and even identify often a top 10 list where we start with a very focused effort on some key suppliers and remedy the errors and the exceptions that result. Initially, we also did a very widespread communication to our entire vendor base, and that was to update our master records and increase compliance. And that was very effective and very well worth the time. But now we're at a point, in order to get up to that optimized level, we really need to take it to the next level and dive deeper on a supplier by supplier basis. So we start with our largest, and that could be the most invoices, or it could be the largest dollar amounts. Those suppliers definitely want their invoices to pass through our systems and understand what they're doing wrong. Sometimes it's as simple as matching the purchase order or matching the part. Lately, it's been matching price as tariffs have caused some disruption, but we were able to quickly respond and modify the system to manage those accordingly. So we currently stand at that optimization level, which is well past the 1-year implementation I alluded to earlier, where data and intelligence really is where we focus, and it's our future. Our supply chain transformation underway is really all about building self-service and driving supplier errors to suppliers instead of Toro. But everything ultimately at this stage is about the data. We trust our systems and know that they pinpoint where our biggest problems occur, and even on a day-to-day basis when they occur. So we feel like we have all the tools in place that can really move us, to even a higher level. Manny, I'll throw it back to you.
Sure. Thank you, Bobby. So just a little quick overall project and implementation timeline. We actually started to engage the Toro Company, back in 2016, to the latter part of 2016. We actually divided the project broadly in 2 phases. Toro was the Toro Company, especially Bobby, wanted to get this, absolutely right. They had actually done, in the past, similar implementation using a different tool. And this was really the second attempt at getting it right. So they wanted to really be focused on the design element. So we spent a good, between, I want to say 3 to 6 months. We had engaged all the global stakeholders. Although the focus was on invoice-to-pay, it's never really successful unless you invite your upstream stakeholders, which is procurement in this case. Invoice-to-pay is such a critical part of procurement, and sometimes what procurement can do affects the downstream processes. So we had assembled a global team, and we ran design over multiple sprints, for different parts of the world. The design reviews, took over, like I said, 3 to 6 months. But what we had at the end was an extremely crystal clear blueprint of what we needed to do, both in terms of policy, process, solution, and of course change management. So these were all very, very critical outcomes of the design phase. And sometime in January or February of 2017 is when we started to go about executing the implementation. And as you can tell, with the timeline here, it took us through about 3 quarters to, get the solution ready. And whilst we were doing that, the Toro business was engaged in change management, updates of policy, as well as getting the business ready to take on this new transformation. We went live in October of 2017, initially rolled out to the illegal entities in the European Union. We did that, and then we quickly turned around and targeted their biggest market, which is Northern America, as well as Australia, in the first quarter of 2018. So between January through February or March, we rolled out to the U.S. As well as to the Asia-Pac market. And then, of course, we went through stabilization, etc. And I let Bobby talk to the results that they achieved through the solution. But in this case, especially given it the global nature of this transformation, the fact that we spent enough time in design allowed us to be extremely successful and actually come in on budget or maybe even slightly under budget on the project. And I don't know, Bobby, if you want to add anything to that. If not, I'll on this slide. If not, I'll transition to the next one.
Right. The only thing I would add is not only did the project come in on budget and true, slightly below, but it came in on schedule and completely on scope.
Perfect. Thank you, Bobby. I'm moving to the next slide now.
So recapping where Toro is today, we process about 700,000 invoices over a 12-month period. Over half of those come to us in an electronic or digital format. About 36% come in email, and the rest are in a manual paper format. We measure our success in one key metric around straight-through processing, where we're currently standing about 85%, meaning 85% of our invoices come in touch-free. We have other key performance metrics around cycle time, past dues, and that helps us not only shrink our cycle, but also improve our supplier relationships by ensuring that invoices are paid on time. Toro is a culture of continuous improvement, so our vision for tomorrow includes many process initiatives. I mentioned the supplier portal. Once we have Ariba in place, we think that supply chain transformation will really bear quite an effect on our invoice processing. And when we look at what comes in without a purchase order, we are extending that rigorous process into our what we call our MRO, our maintenance, repair, and operations expense across all of our plants. We will always continue to drive our paper invoicing down. Some of that comes with new vendors and non-POs, but we also extend and are actively working with our supply base to grow their digital footprint. And then lastly, we've begun to engage with face-to-face supplier meetings when they are on site at Toro's offices to understand improvements and changes that they need to make at their end to remedy any exceptions.
So thank you, Bobby. That was truly a great story to share. When we heard about the 80 or 85% touchless process, and that happens to be the number one metric in invoice-to-pay these days, we were truly pleased. That we had met and exceeded every goal that we had envisaged for the project, and this was a story that was truly worth telling. Having said that, let's spend a few minutes looking at what truly represents best in class. I think in case of Toro, we may have even exceeded best in class, but it's important as you set sail, as you plan your invoice-to-pay transformation journey, to assess your opportunity. Every industry can be different. The type of vendors, can be different. So best in class for me, at least, is not an absolute number. And what we've tried to provide in this slide is a way for you to envisage best in class specific to your own industry. what makes sense to you. Obviously, if you're public sector, for instance, best in class could mean something different to if you were, let's say, in retail or if you were in manufacturing. So what we've tried to do here is assimilate, what we know from white papers and research done by leading organizations, and we have tried to moderate that with our own experience. And the orange circles essentially highlight what we consider high opportunities for time to value, right? So this essentially means how, as you start your invoice to pay journey, these should represent your big ticket items in terms of your opportunity, right? So obviously lowering your cost per invoice is perhaps your number one, first and foremost target that you want to achieve, right? And that's bankable, ROI, return on investment. Whereas something in the blue, so days payable outstanding, that's not something that you actually effect through a solution. It's more a policy. It's more of a terms extension. It's more your buyers, your procurement organization doing terms extensions with your vendors. And of course, the green we see as kind of a long-term opportunity in terms of affecting, in this case, supply chain financing through some of the other supplier management as well as supplier portaling initiatives that you will you may want to effect in that journey. So we see this as high, meaning the short term or the near term, the mediums being following right after the short term opportunities, and the low being something that's more longer term. Okay. So this slide begins to then decompose or deconstruct what I just said. So if what is exactly an invoice to pay value attainment roadmap, right? And the flow that we have at the bottom of this slide really, lays out how you should approach that invoice to pay, value attainment. You want to start by shrinking the cycle, right? And what does shrinking the cycle mean, right? It means accelerating and reducing the time it takes for you to bring an invoice in from your vendors and making that ready to pay, right? And you do that by a few things, by simplifying and digitizing the invoice ingestion process, and that could mean introducing EDI early in the process. Obviously, EDI does not apply to every vendor segment base, but identifying those big vendors, the vendors with which you transact a lot, we call that the short tail, right? A small, maybe 10 to 20% of your vendors with whom you have high transactional volumes, right? Makes complete sense to put them on an EDI program. Effecting the same kind of digitization through adoption of e-invoicing solutions in certain parts of the world, like Brazil, like Mexico, like Italy. These are all adopters of e-invoicing solutions that are driven by government mandates. It's noteworthy to mention that in this case, SAP has a new platform or solution called e-documents, and e-documents, works for both input and output tax. In this case, of course, we're talking about input, inbound invoices, more so than customer invoicing. But this platform is completely integrated with OpenText and invoice management in this case. So these are great opportunities to digitize and simplify that invoice ingestion process, meaning how the invoices come in, right? And how automated we can make that happen. Going beyond that is, the next step is called transformation. If you recall, Toro's numbers, roughly, they had about 55% of 700,000 invoices was EDI, and that still left a healthy, 45% of 700,000 as that they were receiving through, through email, right? And what that meant was that still represented a significant volume that you can apply what we call optical character recognition on, right? Or machine learning. And machine learning, again, is something noteworthy to mention here is as part of the SAP OpenText solution set, there is a new innovation that has just been released. It's called Information Extraction Service, which actually takes machine learning to an altogether new level. It comes with the intelligence to, of course, perform machine reading on invoices out of the box, but the game changer is that it's now going to be able to learn just simply based on user feedback. No OCR training is required. It's perhaps the first of its kind real machine learning that will be available for SAP customers. And you can also imagine, we call this invoice validation. Essentially, it's an outcome of performing machine reading and machine learning on invoices. But if you're a global organization and you would like to leverage labor arbitrage by moving, let's say, parts of your AP teams to shared service organizations in cheaper labor markets, you can also begin to see invoice validation as a service that perhaps your own AP teams don't do. You can outsource. There are service providers that are able to do this. The benefit of doing that is that your AP teams can run lean and they are freed up to do the more complex exception handling and value-added tasks within accounts payables. So that's all within transformation. And then, setting kind of this foundation leads you to managing by exception. And that's really a combination of, making the right policy updates. Invoice management allows you to run very intelligent, and that's by leveraging robust business rules. Basically, this means, allowing invoices to come in, be subjected to intelligent business rules that will allow invoices to be cleansed and either become a posted document, or if they need to be subjected to some, human intervention, the human intervention is solved by self-directed workflows, and these workflows can then also guide the resolutionist in terms of the most, the right resolution choices can be presented to these resolutionists, be that a buyer or a procurement agent or somebody in the receiving department, right? So, so it's all about driving a minimum touch process when exceptions do occur. And these then will generate robust audit trails. The usage of electronic payments, as well as gaining the reporting insight that's delivered by invoice management for driving continuous improvements within your organizations, as well as by performing vendor scorecards. So far, we've talked about the digitization and the acceleration stages, within an invoice-to-pay journey. The next two steps really talk about optimization. You heard about Bobby talking about optimization earlier. So today they're implementing Ariba as their supplier portal. For us, we've seen customers who started off by implementing a supplier portal, and very soon they realized that the supplier portal is somewhat constrained by the bad processes or the unautomated processes that they have in their backend ERP system. So it's very important to start the journey right. And we believe that journey is best done by focusing on your invoice-to-pay process foundation first. And that leads to better value attainment when you roll out a supplier management portal such as Ariba, right? And of course, supplier management portals allow you to onboard suppliers seamlessly, allow the supplier to perform self-service, and that could mean all the way from, receiving the POs, purchase orders electronically, providing PO confirmations, ASNs, etc., all the way through to electronic invoicing, right? And effective supplier portaling can then unlock perhaps the greater value around supply chain financing as well as dynamic discounting. So how does Optima do all of that? In a nutshell, we try to optimize, work on the art of the possible, basically, right? We try to optimize touchless processing, and that means out of 100 invoices, how many can we process through touchlessly? And for everything else, how do we minimize the cycle time? Which means how can I move that exception through the enterprise in the most intelligent, guided, and intuitive manner as possible, right? And whilst doing so, remaining compliant and allowing the payables teams to feel like they're in control. So we do that by our global competence, right? We understand how to orchestrate an invoice-to-pay roadmap and journey around the world. We also do that through effective use of what we call solution accelerators. These are Optima's answers to extending the solution footprint that's afforded by SAP and OpenText. We do that by effective change management orchestration. This process, as much as it's delivered, through the solution, it tends to touch a lot of people. And of course, every good transformation needs to be accompanied by effective business process reengineering. And so we are very, very cognizant of the fact that, staying ahead in the change management game always allows us to get the right outcomes. And of course, we don't focus just on the internal aspect of change management. Vendor onboarding adoption, these are our external stakeholders, is a very, very key in effecting the right outcomes for an invoice-to-pay process, and we have extremely good answers around those two. Thanks, everyone, for attending. We have a couple of questions, Bobby. There's one gentleman who's actually asked two questions. One was, when you mentioned that 6 analysts handle 550,000 invoices, is that the entire AP staffing within your US operations for that volume? And then the second question from the same gentleman is, do most of your vendors submit invoices through the Ariba supplier portal?
So let me address the staffing first. It is true we have 6 full-time staff in the United States for about 500,000, about 550,000 invoices. And the thing you have to remember is with a very high rate of digital, I just looked at the data the other day, and some of the data is variable, so you do need to watch even straight through processing. You have peaks and valleys, you have supplier errors, you have system issues, but we were at 57% EDI invoicing last month and about 84% straight through processing. The rest of the invoices that come in, some are scanned. Our mailroom does scan anything that comes in by paper, and anything that's email, Optima has designed that kind of automated influx, and it goes straight out to outsourced data capture. So I do not have a team on site for any data capture roles, and we do leverage our mailroom for opening up envelopes and converting all of our paper mailed invoices into that email stream. So that really minimizes a lot of touch points in the upfront process and really condenses and compacts that cycle time. Now, there is some seasonality to our business, and we definitely do have other tasks like correspondence and periodically project work. Sometimes it has to do with our payment runs. We recently changed supply chain financing, so that does engage usually our manager. But we have 6 analysts plus a manager. That's our staff component here in the United States. As far as Ariba, that project is just getting off the ground and blueprinting this month, and that is bigger than just invoice, and it does include how we transact with our suppliers and the purchase order handoff and the ship notification. Our vision is intending to roll that out in segments and not as a big bang. But we do see that in time, and I don't know quite yet what the timeline is, but it could potentially be as soon as later this calendar year, that we would have a process that communicates a purchase order to a supplier who then notifies Toro of the shipment, and the plant, upon the receipt, then cues that into our trade payables. So that, in essence, eliminates the need to receive an invoice. And that's really the path that we're headed on. That is really a big leap for a lot of our suppliers, and so we do see that really transitioning over time. And initially, there is not going to be a staff impact because of that prolonged timeline.
Thank you, Bobby. Here's one more question, and that is, looking back after post-implementation, what was critical to the success of the project?
So probably when I kind of reflect on critical success factors, I would say spending time on design is very high on that list. Being able to solve old problems in new ways and explore the art of the possible really required us to dedicate a fair amount of time to get very detailed into our current state. We really probed those touch points, and we had representatives from our different locations present. We had a couple people from Australia, and I think 3 or 4 from Europe present over the course of 7 business days. That tells you how comprehensive and how detailed we actually got. I think that we had the right people present that talked about, why they do what they do, and you really have to get that granular. If you're going to map a strategy and articulate a vision, you really have to get down into the weeds. And, I had done some of that work ahead of time and really knew and, talked to Optima about mapping out really a very comprehensive design session. So that blueprinting was probably more extensive than maybe what others had done. Plus, I would also say we did a couple of pre-project engagements. One was focused on understanding our EDI architecture. It had grown dated over the years and really needed to be modernized. And so we did I'll call it a pre-engagement to assess the architecture of EDI specifically. The second, and that one did involve Optima, by the way. The second one was to outsource the data capture. We did not previously have a partner in place for that, and really wanted to, in essence, what I call automate the email. Some of our suppliers either lack the sophistication or lack the size or the technology support to really adapt to electronic data interchange. And so email became an alternative to really look at how we would just feed those into the system, and we chose to do that with an outsourced entity. So we did a lot of pre-work on that, but again, really dove deep into our current state, and then enabled us to map a very strong strategy and a very, very smart vision.
Thank you, Bobby. We have one more question, and it is an invoice tracker used? And the participant actually elaborates as to what he means by an invoice tracker. I was thinking of a tracker in which the invoice information is keyed in before the invoice is processed to the system. The tracker can then show the invoice status. And he actually has a second part of, a part 2 for the question, and that is, how are the business rules implemented within the organizations?
An invoice tracker. We do assign it a number, so there is a stamp so that everything that comes into the system has a path and has history. And how are business rules implemented into the organization? Well, some of the business rules are really, frankly, behind the scenes. Some of them have to do with tolerances, how close of a match. Some of it has to do with currency and dollar thresholds, and others just allow for some imperfections. And it varies by material. So for engines, for instance, that are very high dollar components, we have lower tolerances than nuts and bolts, things like that. So that's how granular we got when we really started to design some business rules. We also have business rules behind the scenes for how long we hold invoices in a stage setting for the goods to be received, and that depends on where they're coming from. Are they being shipped over the water? Are they being shipped over land? So we really talked about, the delays, and if you really apply yourself to some of the lean principles, they look at where those holds and all those stops occur. And our business rules were really intended to manage that so they didn't require the team to have some oversight.
Thank you for that insight, Bobby. Here's one more, and that's around reporting. It says, what are your key reporting measures, and can you describe the tools you use to produce them?
So as far as reporting measures, and that is key, you cannot improve what you cannot see. So I would say spend some time on understanding what's important. Invoice management, OpenText has some very robust out of the box analytics, and our accounts payable manager uses that every day to manage priorities. So that is a very good operational tool that comes with OpenText. We decided to layer on top of that a dashboard. We call it a dashboard analytics using MSBI tools. And we did that so that we could have a visual format. We have working reports in Excel, so there's some really easy, basic data sorting and filtering. But we measure our invoice processing as a global service using our dashboard, so we can see very easily, where we're at. I can get a lot of the data points that I spoke to today came right off the dashboard, but the dashboard also allows us to trend, and we like to see peaks and valleys. And so when we talk about, for instance, straight-through processing, we can see highs, we can see lows. A good analyst will understand what variables caused, especially the peaks and valleys. Some of the core data that we collect, certainly volumes, and volumes by channel, by region, by supplier, by exception. We manage and measure straight-through processing by month, by region, by supplier. We look at our cycle times. We look at how long it takes for data capture to occur, how long it takes on average for approvals to occur. And that could be for non-PO invoices and exceptions, such as like a price exception that has to go to a buyer or a commodity manager. We look at past dues. They certainly do affect our cycle time. And then I think as we talked a little bit about in our optimization is our supplier performance. I can key any vendor number in and get a snapshot over 12 months, how many invoices I've received from that particular supplier, how I received them, how many went through straight through processing, what their exception history looks like, what their past dues look like, how many days they are paid, so our terms, how they get paid, so that we have a face-to-face meeting with our supplier. It's meant to be a takeaway. and we actually have some lines on there where we write down some key actions or some key initiatives that they take back. Usually it's a sales and sometimes an engineering contact that will come on site to Toro. So we use that takeaway to really drive some of the improvements that we need from the supplier. A good example is when they bill us with the wrong purchase order. That's a really easy one for a salesperson to take back and have the right conversations with the right people. And oftentimes our accounts payable analysts maybe aren't reaching the right person. So that's maybe, just a high-level summary of all the different types of things that we measure.
Thank you, Bobby. And one final one, and maybe I will actually take this. It says, you spoke of new OCR innovation. Can you provide more details on why you call this game changer? So the new OCR innovation is actually called Information Extraction Service. The traditional engine for OCR for invoices has been called ICC or sometimes BCC. In the past, it did extremely well when it came to especially header level detail, but it did have some constraints, let's say, when it came to line items. And that meant that you couldn't train OCR to read line items and remember that, right, and recall it for later. Information Extraction Service basically changes all of that. Not only does it eliminate all those constraints that I just described, it also doesn't need any explicit training like it did in the past. So in the past, if an invoice, let's say, was not automatically machine read, somebody within the AP operation would have to teach OCR how to learn and remember that. With this new version or solution improvement, that step is completely eliminated. By just a human operator performing a task on that invoice, the solution is able to understand, retain, and bring that to use at a future stage. So the concept of training or learning is passive, and it's happening all the time behind the scenes. And on that note, I think that's all of the questions. We will pause there. We want to briefly mention that Optima will be at SAPPHIRENOW, which happens in May. So, if you will be there and you have further questions, of course, feel free to reach out to, either Bobby or us, Optima Consulting on our website. Or do stop by at our booth at SAPPHIRENOW. Look forward to seeing you and having a chat with you on your invoice-to-pay journey. On that note, Katie, I'd like to conclude and maybe hand it over to you.
Awesome. Great work, guys. I want to thank everyone for joining us. And if you do have additional questions, feel free to reach out to Bobby or Mani. Their contact information is on the screen right now. And thank you again for joining, and I wish everyone a wonderful rest of their day.